Howdy and welcome back to Converge. It is May already, 2025. I've got my lovely co-host Alana with me and a great guest, Bryce Deeney, the Chief Executive Officer of Equipify. Bryce, thanks for joining us today and for sitting down to talk BNPL or Buy Now, Pay Later. It's been a while since we've chatted about BNPL on this show, so I'm really psyched to see what you guys are innovating on in this space. There's obviously a lot of opportunity there. Bryce, can you just give us a little bit of your background personally and then some Equipify sort of primer to start things off? And then we'll jump in with Alana.
Sure. Yeah, Alex, appreciate the opportunity and to be on the podcast today. My background is pretty eclectic. Sometimes I feel like I need to start from the beginning, but to keep it brief. I grew up poor up in Washington State, like a suburb of Seattle, and really fell in love with math, specifically probability statistics. Ended up competing at the local level, then state level, then national level. And because of that, games like chess and poker kind of came into those little cliques that I was part of. And then, post school, I really went in headfirst into poker and ended up playing professionally for a number of years. And in 2009, the feds shut down online poker, and that was really my only source of income. So you got to think I'm a math nerd with no real life work skills. I was making more money than my friends were when they were graduating school. And then I not only lost my source of income, I lost my assets because it was seized by ICE.
Wow.
So, and by the way, I got married during that time too. So I went from making a lot of money to making no money. And Fintech kind of found me. My wife had got a corp job at American Express after graduating law school. So we moved down to Phoenix so she could take that role. And very, very small point of sale company here in Arizona said, well, hey, will you come help us grow? And it was 3 guys in the back of a doctor's office at the time. And we ended up scaling that company up for 7 years. And I wore various hats from go-to-market and product. And we got acquired by Repay. So they acquired us. We were AR automation. They acquired Billing Tree, which is AP automation, rolled it up and then went public. And then I spent a couple of years as a banker, which is actually where kind of Equipify comes into play. I ran payment product and strategy for one of the largest credit unions in the country. They rebranded, now they're Global Credit Union. And my job was fairly simple from a mission perspective. They hired me to ensure that they remain competitive for next generation consumers who called us home for banking. So think about like your typical products, right? Debit cards, credit cards, bill pay, P2P, rewards, digital banking, notifications, etc. And I saw a giant gap, which was consumers were no longer migrating from a debit card to a credit card when they finally had that right income or right job, right status, typically late 20s, early 30s. Instead, they were choosing to use a debit card and third-party buy now, pay later, right? So you think of your products like Affirm and Afterpay, PayPal, Klarna. So there was this new wedge in the wallet that traditional FIs were not solving. And me and a couple of co-founders decided, hey, let's go solve this problem. Nobody's solving it the way that a traditional financial institution wants it solved. And that was in 2021. And, I'm sure we'll talk about more about the company, but that's kind of what led us to start in the company.
That's Very so cool. Interesting. That's so interesting. So you went from a professional poker player to kind of the corporate world and banking, and then became a founder. And here you are completely disrupting the space of buy now, pay later, right? It's like your organization doesn't run the way I would call it, say, the standard play of buy now, pay later. So tell us a little bit about the modeling and how it is so different and how it is so disruptive.
Yeah, it's a great question. most people think about buy now, pay later as a button on a website, right? So if I'm buying something from Lululemon and it's, $200 overpriced leggings, and I'm like, hey, how do I pay for these leggings? Do I pull out my card like, consumers always have since the advent of e-commerce? Or do I apply for a short-term microfinancing loan from a fintech with a button? And that's kind of the landscape that all these direct consumer fintechs compete on. Is when they talk about them gaining market share, really what they're doing is they're trying to figure out how many websites can I get my button on. Where if you think about that from a banking lens, every time a consumer elects to click that button, you are taking a revenue, brand affinity, and engagement away from the card issuer that consumer would have used prior, right? So I believe today it's like 1 in 8 e-commerce transactions, the consumer is electing to pay over time through fintech, buy now, pay later company, where most people don't talk about the inverse of that. 7 of 8 are choosing to use the card product that they use for everyday purchases. Think of Equipify as the ability for the other 7 to also have that same power and functionality. The difference is now it's coming from the financial institution I already call home for banking. And I don't have to switch a card product or apply or download a new app or set up monthly payments or weekly payments. It's now just a fully embedded experience inside of digital banking. And I think the best analogy for those who aren't familiar with Equipify is everybody today knows, if I use Zelle, I'm using that for my bank. And if I use Cash App or Venmo, I'm using that as a direct consumer, iOS or Android app. Buy now, pay later up until Equipify was just the Cash App and Venmos. Nobody had built the Zelle. And that's really was the problem we set out to solve. Is people like my mom would never go, book her Carnival cruise and use Affirm or Afterpay. She would always use her bank. And because of that, in her mind, she's like, oh, I will never use buy now, pay later. But the second her bank actually launched our product, she used it immediately because now it's just a simple button from the bank that they already trust.
That makes total sense. So that being said, I mean, what were some of the biggest challenges, right, when you're building this different type of model and then you're going in trying to sell it, right, to kind of a fairly closed loop system like community banks and credit unions? I mean, tell us about some of the challenges where you're coming in and saying, hey, we're building the easy button, but you're going to own the easy button, right? And, tell us about some of the challenges, like kind of first launching.
Yeah. Banks traditionally haven't thought like product companies before. Usually a lot of the fintechs that they're partnering with are like fraud, anti-fraud solutions, or maybe they're upgrading existing products. They're just wanting a better version of bill pay, a better version of rewards. And buy now, pay later is not a feature, right? This is a new lending product.
Yeah.
And the last new lending product that a traditional FI stood up was the HELOC. So we're talking 10, 15 years since the C-suite of a financial institution got together and said, hey, let's launch this new lending product. It's also a new payment method. So really, if you think about the people inside of these financial institutions who are saying, hey, we should probably remain top of wallet, because if you're not top of wallet, you don't get the deposits. If you don't get the deposits, you're not a bank, right?
Yep.
So because of that, you're right. It is challenging. There's usually 5 buyer personas within the financial institution that deeply care one way or the other when it comes to a product like BNPL. With that said, I did a lot of validation before we even started the company. I cold reached out to 100 financial institutions before we even filed paperwork to create a Delaware C Corp and said, hey, if somebody provided the easy button, using your words, to launch buy now, pay later, would you do it? And I won't give you the exact numbers, but it was high enough that clearly there was an appetite for institutions. It wasn't just me at my credit union realizing we're going to lose lose the battle here in engagement and deposits in the next 20 years if we don't have the right payment methods that consumers want to use. The other thing that's unique to our company within these financial institutions is most fintechs that build products that are, financial institution facing, bank facing, typically they're saying, hey, stop doing it this way, do it this way. So usually there's like a rip and replace. You have to look at contracts to figure out, it really exasperates like a longer sales cycle. Where for Equipify, do you want to launch buy now, pay later, or do you just want the status quo? So because of that, our sales cycles are actually very, very fast for an enterprise sales motion. And our implementations are very fast because we're not doing any like change management. It's simply like, hey, do you want to install this and launch, or do you want to, wait till next year?
Amazing. So obviously that answers some of how you've been able to sort of scale quickly and drive adoption with that ease of implementation. But with a net new model like this, and especially within legacy bank credit union spaces where it's quite hard to break in with new models and new operational models and whatnot, how do you focus on that problem of scaling quickly enough to drive adoption to prove out what you guys are doing? What's your secret sauce for scaling and growing at this stage in your maturity?
I talk to probably like 20 to 30 other fintech founders on a regular basis, like quarterly basis. And what you just asked tends to be the number one pain point of fintechs that sell into this space is how do we get the pull through? How do we get the adoption?
Yeah.
Right. And that can be true when it comes to just like, how do we make implementation easier or how do we drive awareness, especially if it's like that B2B2C model, similar to Equipify, where, we turn on like Arizona Financial here locally, 140,000 consumers. They launched Equipify about 90 days ago. Now, how do we engage those 140,000 people and let them know there's a new button and there's new capabilities that come with your checking account, come with your debit card. And so one of the things that we built from day one is an entire notification platform that is B2B2C. So Equipify actually is sending out millions of notifications a month directly to the consumer on behalf of the financial institution, but we're elevating their brand. We are white label. So and it fully deep links into their online banking. There's no application process to the consumer. So sometimes you have to build the hard thing that actually isn't what you're building to realize the value of what it is you set out to build in the first place. I think that typically is a missed piece of selling into banks is a lot of people build beautiful UX, beautiful admin portal type of enterprise capabilities, but they don't really think about how do we drive consumer, whether it's SMB or consumer, how do we drive that end user engagement to the nth degree and actually turn this traditional FI into a fintech, right? Like SoFi isn't a fintech because they offer pay over time solutions. They're a fintech because they send you the right messages at the right time, always on. They don't have a giant marketing team that's running campaigns and pulling data and running campaigns. It's always on. And like Equipify, we don't think of ourselves as a communications hub or a communications platform, but I do believe we've built one of the best like enterprise communications platforms for financial institutions. And we do that because we want to drive end user engagement for the product that we sell.
That's smart. Well, and my being in partnerships, right, for like 15 plus years, it's one thing to sign a partner. It's another thing, right, to activate them. And so the way you've done that seems incredibly smart because a lot of times it's like, you're kind of offering, like you said, a completely net new product, right, or service. You're the expert in kind of that value prop of the service and the deliverable of the service. So who best then to deliver the adoption messaging than, being the subject matter expert? That's awesome. That's
Indeed.
awesome. So tell us, I guess we've gotten into like the founding, right, of Equipify and kind of breaking into, the buy now, pay later space. What's the real, kind of differentiator you would say for, Equipify? Like, how does it compare to other buy now, pay later? You say, it's done directly through the FIs.
Mhm.
But that being said, kind of more granular, like what are the interworkings? How does it know how much, to give that end consumer?
Sure. Yeah, I mean, that really is our secret sauce, is the thing that makes us completely unique. When a financial institution launches Equipify, um, anywhere from 30 to 70% of consumers that call them home for banking are automatically now going to have purchasing power and buy now, pay later offers out of the box. There's no onboarding process, there's no application process. And because of that, the consumer experience, we've been able to delete a lot of the friction that comes from leveraging buy now, pay later solutions. For example, like if I was to, want to use Klarna for the first time today, if I'm at, an e-commerce website that offers Klarna, I have to apply for a Klarna account. Now, don't get me wrong, Klarna's made it very easy to create an account. However, Klarna doesn't even know that I, as a shopper, exist on that website until I start interacting with their button. And then they now need to KYC AML me. They then need to probably plaid me and get a lot of transactional and consumer behavioral data on me as an end user to determine my propensity to repay. And once they get me on that one transaction, now their job is, how do we get Bryce to download our app and shop inside of our app for all of his future purchases? Equipify's secret sauce is, one, we're a data layer sitting on top of the banking core for the financial institution. So I know every fintech, every bank has always talked about, how do we monetize? Like, we're sitting on a treasure trove here of behavioral data, transactional data, purchasing data. Equipify has turned that into an always-on engine. So I'm using me as an example again. Once my bank launches our products, I don't have to tell it to create an account or give it my shopping behavior. It's already existed and built into the engine itself. So not only will it know I went to Sephora today, it also knows that every spring I shop at Home Depot. It also knows that Walmart is my once a month place, but Costco is where I buy my groceries. So we're able to generate personalized, real-time, always-on offers that are relevant to the consumer and driven by the FI that the consumer already trusts. The last thing I'll just say really quick is, this is generating microloans on the existing banking core that the FI has leveraged sometimes for decades. Maybe they've switched recently, but usually for
We
decades.
don't have time to get into cores today, but
Yeah,
we
that's
get
a
you.
3-hour segment. But because of that, it's also just the operational lift or lack thereof is one of our secret sauces. Is this is a extension of the existing technology that the bank already leverages today. We're deeply embedded in platforms like Fiserv and Jack Henry and others, and because of that, the operations and the lending groups at these financial institutions, they love bright, shiny UX things. But it's okay, once this is installed, how much effort goes into this? One of our secret powers is we're all ex-bankers, right? From me to my co-founders to my head of customer client success. We all came from this world. So we didn't build this to sell as much as possible. We built it to operationalize as much as possible. Fast forward today, we'll cross about 70 financial institutions this month. We have a customer success team of 2. Which for an enterprise platform, we might be the first to have that type of like leveraged ratio for those who sell into this space. And I think a big part of that is because we don't look at ourselves as like this new application that's sitting out here in the cloud, although we are. We think of ourselves as a new module you can unlock for free on your core, a new module you can unlock for free on your digital app.
Wow. And it's almost purpose built, to kind of be interoperable and then leverage the existing data. So then external service is probably pretty minimal, right? It's like it's completely native and built in based on the, kind of customer data, which is interesting.
Yeah, I mean, we do have an admin portal where they can log in and like update their rules, settings, which merchant category codes do you want on, off, dollar limits. They can update traditional lending agreements, change notification sequences, etc. Like a Jack Henry core can't have those out of the box. But it takes. We just launched one that took them 60 days from contract to go full consumer facing live. And our average bank submits like one ticket a month to us, and usually they're general inquiries. So yeah, I mean, we've invested a lot and we've raised a decent amount of capital. We've raised $20 million to date. The big part of that is we wanted to operationalize this. That way we could have thousands of financial institutions add BNPL just like they'll added credit cards, 25 years ago.
Yeah.
So in terms of if we think about the future of financial services, obviously we talk a lot about embedded finance on this show and how the trend is moving towards this financial system of the future not being built in banks, but rather embedded into the apps and the platforms and the services that people use in their daily, everyday lives. You guys are disrupting the BNPL space, and you're going head to head, like you said, with other players that are more a third party, Affirm and Klarna type solution. Can you just hypothesize, what do you think the BNPL market is going to look like in the future when, there's really, people are not relying on traditional banks, but more those embedded services into their favorite apps? How's it going to look different in the future than how it looks now? And how's that shaping your vision for how you grow and evolve at Equipify as a BNPL provider? Is it even going to be, what it looks like now, where you have different types of BNPL players, or is it just going to be part of the experience internally on someone's, favorite e-commerce app or whatnot? But what's your vision of the future of this space?
Yeah, I mean, but buy now, pay later is evolving at a insane rate, or especially like post ZIRP years. We've seen a lot of change in buy now, pay later, specifically in the U.S. market, which is where I follow it the most. However, we do have some interest in other markets right now. I think we're a decade away from there being roughly 5,000 different lenders that offer different flavors of buy now, pay later. And I would draw parallels to the consumer credit card. So, back, Alex, I know you're very, very old, so you're going to remember these days, 50 to 1980, Bank of America card, right? And all the mega banks who really invented the distribution layer of consumer credit cards. It wasn't until the late 80s when the FICO Fair Isaac score became the standard for unsecured consumer lending. And then you had platforms like FIS and Fiserv build a very, very legacy, like I'm talking like 3.5-inch floppy disk legacy platform. So the long tail of financial institutions could also offer unsecured credit and credit cards. So, on the credit card side, we went from 5 issuers to 9,000 in about 15 years. And there's been a little bit of consolidation on that, but there's still roughly 5,000 places you can go get a consumer credit card in the US. And obviously the majority of that growth is on the fintech side, right? Because the direct consumer fintechs were the last of those 3 mega banks, long tail banks, and then fintechs. And buy now, pay later is literally the inverse. It started with fintechs, then the mega banks, right? Chase launched buy now, pay later, Amex launched buy now, pay later, Citi, et cetera. And then now the long tail. So I actually believe that buy now, pay later is going to be no different. And I actually think Max Levchin at Affirm says this is a reality. He calls Affirm the American Express of buy now, pay later. I've talked to other founders, I won't name names, but one of the other ones is like, oh, well, we're like the Capital One of the credit card world. Well, Equipify is the Visa. So we don't think of ourselves as a direct competitor to a Capital One or to an American Express. It's our customer base that is a direct competitor to top of wallet. We do not, Equipify isn't like, yes, we have end users, but those are ultimately not my users. Those are my clients' users that we help them enable.
That makes sense. So it's more of like a B2B2C type of play, almost like, if it was an app, like a PayPal, right? Or a Zelle or something that is like used by an install base, but ultimately all of the user data and everything is what's going to drive the intent, what's going to drive the value, what's going to drive the, kind of expansion, right? And so, I mean, they
Well, and
say,
to that point, we named the company Equipify based off of Shopify because Shopify enabled
Ah,
a tail of retailers
got it.
to compete with, the mega e-commerce
yes,
giants that were born in the late 90s. And
Mm,
we, being bankers, we knew that you have to compete for payments to compete for deposits. So if you're not able to get a 21-year-old to open a deposit account and start using your cards, the death is near, right?
yeah.
So we were looking at the Shopify model and saying, hey, somebody has to build this for payment methods and deposit methods for the long tail of for Main Street. And that's why we named the company Equipify.
That's so good, and
love it.
definitely Shopify, I think, is one of the best, right? It's like there's so many alternatives, but I think Shopify has the most. It's almost like the continuity of care along the,
Mm.
value chain, so that's really illustrative of kind of what your vision was. Um So let's talk about, kind of like banks versus fintech, right? That narrative now is just totally outdated. We're seeing all this co-opetition. Um, you know, the way you're working with banks kind of to improve options for their, banking customer ecosystem. Um, you know, how does it become more competitive, right, with Equipify in their stack, kind of explain how the banks or, the fintech or whatever, the credit union directly, benefit with Equipify.
Yeah. Put simply, we increase top of wallet engagement. And that could be with interest income, interchange income, and literally people logging into online banking more. Um, we see an 18% lift of digital engagement when they launch Buy Now Pay Later. So, if they were getting 1 million people to log into online banking, we're adding 180,000 on average on a monthly basis to that bank. So that obviously allows them to cross sell other products and do other downstream things. But ultimately, we're like bridging the gap between shopping and banking.
Mm.
So, usually you would get your card product 10 years ago and the bank just crossed through their fingers that you keep using it forever. And now we're actually bringing that shopping experience inside of your app. So if I'm like, hey, I need to go buy a fridge, I'm now actually starting inside of my banking app to see what my purchasing power is and to see if there's any special offers versus starting at, I guess it used to be Google. Now it's more AI, but instead of starting on like Amazon or
Yep.
Google.com, I now know, okay, I have intent to go buy something. Let me go see where my buy now, pay later purchasing power is. So we're kind of like shifting that consumer behavior, and downstream, there's a lot of really cool things we can do with that. Um, but I think that is where the power of launching buy now, pay later is not just reducing like attrition in deposits or interchanges, also like forward looking opportunity that we can drive for the financial institution. For the consumer, that's actually who we built this for. Is back when we started the company in 2021, every survey said 70% of buy now pay later power users would prefer this from their bank. It's just their bank didn't offer it.
Right.
And we've proven that to be true. In fact, uh, 1 year after a bank launches Equipify, their user base, right, those who call them home for banking, use us more than Klarna, Affirm, Afterpay, and Sezzle combined. So we
Wow.
have extreme product market fit, and I don't think that's because our UI is better. Like these direct consumers are incredible at building immaculate products. It's because
Mm.
consumers want that super app experience. They don't want to have to go shuffle between 7 different apps to figure out their money management. And then post loan, which is my favorite saying, like post Malone. Anyways, I'm a nerd. But post
Malone. That's
loan, uh, now I'm logging into my buy now pay later app and then my banking account and looking at the payments versus deposits to see like, am I going to have enough money to like cover all these different things? Like we can, we have the data and we have the user experience. We can solve all that automatically for the consumer. In fact, you can't even take out a buy now pay later loan if the math doesn't work out for you.
Good.
So it's a way different consumer experience, leads to significantly lower delinquencies than direct consumer apps. There's a tremendous amount of value on both the FI and the consumer side.
Okay.
That's awesome.
So we keep talking about consumers, right? And banks, and consumers and banks. Is there anything on the horizon where you, Equipify, kind of think that you might move into VSB space or SME space, right? There, because like you said, the buy now, pay later space is just so crowded, and there's Affirm, Klarna, Zip, Zilch, right? Everything. Um, and the B2B space is huge. There's massive, kind of TAM there to be able to tap into. Tell us about your thoughts. Do you think you'll be a consumer platform forever? Do you think you'll test the waters? Are there immediate plans, etc.?
Yeah, well, it's a big question.
Yeah.
What I will say is we're able to build a multi-billion-dollar company, uh, being laser focused on the consumer side. It's giant TAM, giant SAM, and we kind of have built a new category, if you will. With that said, our clients who launch Equipify, a couple months after they launch and see this thing just work magically, they start saying, "Hey, can you also do these things for us
Right.
too?" And that can apply, yes, to SME, but it can also apply just to their other lending products. Um,
Mhm.
so I do believe that we will get there, whether we almost want to or not, because of our customer
The
pull.
stickiness. You've already created stickiness. Now they want you to do more, I bet.
Yeah, yeah, and on the SMB side, there's a couple different flavors of that too. Like if that SMB is banking with our customer,
Mhm.
that them enabling pay over time solutions attached to like their commercial cards, their debit cards that these SMBs are using, or even just offering that experience inside of digital banking is a like we already have all the plumbing and infrastructure. They can literally turn it on in our admin portal today. Um, we are writing buy now pay later loans for our small businesses today. We just don't advertise. We don't
Yep.
sell the platform that way.
Hmm.
But really, how we're thinking about short term on the merchant side is really just bringing the merchant experience inside of digital banking. So whether that is you are selling water heaters, or some like large appliances for in the home, or you're a major retailer and you're wanting to add a button for purchasing power to millions of Americans, and there's no application process. There's like our mission statement is to bridge the gap between shopping and banking, and we're
Mm.
not doing that just by baking BNP or bolting BNPL to the checking account. It's also literally having the shopping happen inside of online banking. So I think there's applications that are not just for major retailers, but also the SMB side as well.
Yeah. Well, yeah, because you've basically productized kind of that algorithm. And so you're right. Even if it's like a major retailer and they have data, right, on their end customers, all of that might be extensible based on kind of what you've built today.
Well, and if you think about it, if I'm a major retailer, I'm signing up for a direct consumer buy now pay later company to increase order value for those who I've already convinced to come shop at my website. And I'm trying to reduce cart abandonment. So if that consumer was about to leave because maybe it's too expensive, hey, here's this like secondary insurance uh, button you can click as a consumer so I don't lose you. Where Equipify's value to the retailers is almost inverse. It's actually, hey, we know those consumers who don't shop at your store. Would you like them to shop at your store? Do you want to offer them incentives? So on the B2B side, we look at ourselves a little bit more like a meta,
Mm.
uh, to where we can actually help drive behavior as long as you're willing to incent and you're willing to offer a consumer the best possible borrowing cost, then we'll allow you to offer this on our platform.
That's really cool. Really cool. Yeah. Great. Heck of a business model. Hats off to you guys. Well, just to close things out, Bryce, this has been great. Tell us what you're most excited about for the remainder of 2025 that we can look forward to and point our listeners to keep an eye out for.
Yeah, we have not. This is like breaking news. First of all, I've said this publicly. Yeah, we're going to announce pretty soon our open APIs. So very soon, any card issuer or account provider who wants to offer BNPL natively inside of their consumer experience they don't have to wait for us to go build an integration into their stack anymore. So we are going to be launching that publicly here soon. And, because we're not a balance sheet lender, right? Like we're not the lender of record to the consumers. That also kind of opens up the market outside of the US for Equipify, which is a really big moment for our small early stage startup. Yeah.
Well, that's a huge announcement. I feel like you and I should have a conversation now offline because I do global strategic partnerships and we
You should.
are global international rails, right? And so, yeah, I mean, powering a lot of our SMEs and corporates and all of that, there's opportunity for partnership on the buy now, pay later side, even on university payments, things like that. So I feel like there's plenty more conversations to be had.
Plenty more for sure. Bryce, thanks so much. This was great. Awesome to have you, and best of luck for a very successful rest of the year and beyond.
I appreciate it. Thanks for having me. It was fun.
Yeah, our pleasure.